Well, hello everyone. Welcome to Long Options. My name is Barb Armstrong. I am filling in for Rachel Deschelle today, who has the day off, and delighted to be teaching this Long Options class. I used to teach this class, so I'm back on familiar turf. And I thought today we would look at a short-term long option trading strategy. That's what we're going to talk about today. Yesterday, in trading a smaller account, we looked at a swing trading strategy using long stock and long options and kind of compared and contrasted them. So if you're interested in swing trading with long calls, you could go back and look at that. But today I thought we'd look at a one ATR strategy. And if you're not familiar with that, well, buckle up because we're going to go over all the ins and outs. I'm going to show you an example trading plan for a one ATR strategy, and then we're going to place some example trades. Now, I've decided to partner this with our trading a smaller account class so that we can follow up on these trades because next week Rachel will be back and I won't be sitting in the saddle for long options. At least that's my expectation. We've got Brett Crowther with us in the chat. He is a fellow coach and coaching manager, and he is on X. So if you're not following Brett, you may want to follow Brett Crowther CS. And if you aren't following me on X, well, you're missing out. So Barb Armstrong CS, I invite you to follow me there. I'm also now on LinkedIn, where I can post kind of, longer content than I can on X. So feel free to come and find me there also. Yeah. So Wacky Whack, you're with me today a lot. So pour yourself another cup of coffee because here we go. Okay, so this is an options class. Know that options carry a high level of risk and aren't suitable for all investors. You have to apply for option trading privileges with Schwab, and not all will qualify. We will do all our example trades on the Paper Money software application on the Thinkorswim desktop platform. Know that this is a great place to learn how to trade a new strategy, to make sure you understand how the platform works, to place the trades you want to place, and that you understand your trading plan before you go to a live account. So Paper Money is a great place to do that. There are some nuances and differences, and we'll talk about those as they apply. Okay, so we're going to discuss the concept of this particular trading strategy, of a one ATR target and exit. And we're going to do some example trades. I won't be doing any trade management in this class. We'll discuss how we're going to manage these trades. And I'll show you how to do that, but I don't have any one ATR targets long calls on right now. Or we would go in and adjust them, but we'll walk through how to do that as well. So let's get right out to the platform. And if we look at what's been going on just in the market, and I do a super quick market overview in classes now because Kevin Horner, 4 out of the 5 days of the week, comes on, or if he's away, somebody takes his place and does in Trader Talks a really comprehensive market overview. And so if you aren't tuning into that, I encourage you to do so. But the S&P 500, we were in correction territory. It's blasted up to the upside, so we have this great V pattern happening. And on Friday, we hit a new high for the market. Okay, so that's pretty incredible. And now we're kind of consolidating. Some might say, oh, are we setting up a bit of a bull flag? We could be. There's still a lot of uncertainty geopolitically about, say what's happening in the Strait of Hormuz. And, there may be some other things that are creating, a little bit of angst. TUM sales are probably up globally in the last month and a half. But, when we look at the NASDAQ, same kind of thing. We were officially in correction territory. We had this incredible, I think it was, just let me get my drawing tool here, about a 13% move to the upside in like a very 14 trading days. Yeah, in 14 trading days, up 17%. So, it's been an extraordinarily fast recovery. And now we're consolidating a bit. And is anybody shocked? Yeah, no, nope, nobody's shocked, that we've got a couple of days of consolidation happening. Now, could we pull right back? Well, anything is possible. Sorry, our Dow, are we seeing variations on a theme here? Yes. Correction territory, quick recovery. This one didn't come up and hit a new all-time high as the S&P and the NASDAQ did. But if we come and look at our small caps hit a new all-time high today and are now, pulling back a bit. But, it too has had, this correction territory kind of pullback and then this, dramatic recovery. And where's our VIX? Back, just hovering around 20, and it was like 2 weeks ago, we were up in the nosebleeds around 30. And so this makes, when we're down in that 20 neighborhood, the buying of an option more affordable because volatility tends to pump up the cost of the options, right? Right. Just nod your head in agreement, okay? Okay, so we're going to then just have a super quick look, and there's a reason that I'm doing this. If we look at the last 3 months, energy at the top of the heap and, information technology working its way back up. It was in third place, materials in second, but in the last 4 weeks, energy has gone from number 1 to number 11. It's gone from first place to last place. And technology, which was hovering down around the bottom for a while, is back at number 1. And so, and I've linked my chart to the watch list. And so we can see that, like the S&P and the NASDAQ, this, was pulling back and has had this extraordinary recovery. And I say this because we're going to look at some tech stocks today. And so, one of the questions I get asked a lot is, how do you find the stocks that you're using as an example? Well, this might be how. We look at this and say, hey, tech was, getting pretty beaten up over, a period of several months, really from the end of October through the end of March. It was kind of in this downward trajectory, and then it's kind of had this screaming recovery. And might there be some tech stocks with setups, that might make for an interesting example trade? And so we're going to look at a couple of those. Now, what about this one ATR strategy that I said that we were going to talk about today? And what does that even mean? So if you've been following me and trading a smaller account or some of my other classes, this is a trading strategy I got from Scott Thompson. And he used to have a class like back, because I came to this business as a client of this education. He had a one ATR trading class on Friday afternoons, I think it was, back in the day, a long time ago. And that's where I got this idea from. And so when we look at this, if you don't have ATR on your chart, if you come to studies, edit studies, and then just type in ATR, it's at the very tippy top of the alphabet. So then you just add it. I've already got that here. And this is the default, that it's a 14-day. If you want a more detailed definition of how ATR is constructed, you can click on this little question mark and read that. I just want you to be aware that that's there. I've already got ATR on the chart, so I'm not going to add it again, but then you'd hit apply and OK. And now we have this ATR. And ATR stands for average true range. And what it means is from the high of the day to the low of the day, over the last 14 days, this is how much this stock has moved in an average day. So the S&P 500 index has on average moved about 108 points a day. But I mean, this is on a $6,000 index. So if we were to bring up, say, Microsoft, we could see that, in an average day, this has moved over the last 14 days, $9.73. Okay. And this is kind of like the tech sector that we just looked at. This has been on the struggle bus since the end of October, just like the tech sector. Okay. So it's been rolling on down the hill. And then we seem to reach this bottom here, at the end of March. And now it's not only kind of started to recover, but it's broken above this old resistance line. And so could it be on its way back? Now we have earnings coming up here. So if we're looking at this as an example on the 29th, so that means we've got about a week before earnings comes out, but this has broken out, kind of come back to retest and is moving again to the upside. So if we looked at this as a bull flag pattern, today, if this were the close of the day, we'd have a close above the high of the low day. So that would be considered a legitimate technical entry. Okay. And so, but if we looked at this and said, we still got all this stuff with the Strait of Hormuz and who knows, what can happen. So why might somebody want to trade a short-term trading strategy? And it could be a couple of different reasons. So one, it could just be that we want to, whoops, that's a pretty skinny line. Let's make that a little heavier. So one, it could be that we want to create an income stream. So in our trading a smaller account, we decided that our goal for the year was to try and make $200 a week, so that we could put it into a fund. It could be your Paris for Christmas fund, your new car fund, your new living room furniture fund. It could be pay off your credit card fund, like whatever you want it to be. But let's just say that was your goal. So it could be that you want to generate an income. It could just be that you want some growth. Or it could be that you want either one or two, and you want to look short term because it's a way of dealing with uncertainty in the market. So where, in some market conditions, uncertainty. So this might be a way of dealing with uncertainty geopolitically on a global scale, or whatever it might be. You might say, normally I might look out a little further, but with everything that's going on, I'm not so sure of where we'll be a month from now, but I could see that Microsoft might go up for the next few days. And so this is not a long-term trading strategy. We are not putting a ring on it. This is like a very short-term dating strategy. Okay, so these are some of the reasons a trader might consider a trade like this. And you might have the majority of your account invested in longer term holdings, and you're going to, let those stay the course. But maybe with a part of your portfolio, you'd like to either accelerate your growth or you'd like to generate some income in a way that recognizes and deals with longer term uncertainty. Okay. And if things go like tickety boo and according to plan and everything remains bullish, well, this isn't a one and done strategy. You can do this strategy even on the same stock if the setups continue to present themselves multiple times. Okay. Okay. So CB is saying, are we planning to be out before earnings on the 29th? And the answer to that is yes. Typically with these, because if this moves on average $9.73, what we're going to do is we're going to hover over this candle and we're going to say we're going to take today's high. So our target is going to be based on today's high plus the ATR. Now, if you want to be more conservative, you could just say, I'm not going to go with today's high. I could, and this is your trading plan, so you can do it however you want. Or I'm going to look at the current price, so the current price is 424 and the high of the day is 427. So This is a more conservative target, right? The current price plus 1 ATR. And then our exit is going to be, you could either make it current price minus 1 ATR, or you could make it today's low, minus that 1 ATR. So if you're new to this strategy, that's kind of the idea of it. And then on a daily basis, once we place the trade, because we're at most risk when we first enter the trade because our stop is 1 ATR below. This is a $400 stop. So if it doesn't hit our target tomorrow, at the end of the day tomorrow after the market's closed, we're going to come in and we're going to update our stock. And if the stock is over 200, we're going to make it $2 below the low of tomorrow's candle. So Andy is saying, are you concerned about earnings? If the earnings was coming this week, we would not place this trade. But our expectation is to be in and out of this in a week. Now, this is going to lead to some questions. What questions? Oops, just let me hit my eraser board here. Clear. Okay. So when we look at, if we're coming out, if I only want to be in this a week, why wouldn't I look at, say, the May expiration if I want something that has lots of volume? And if you look at an example trading plan for this, and I'll show you where that is in just a minute, one of the things on our checklist is, does this trade 1 million shares a day or more? Well, we're at 16 million because we want it to be a heavily traded stock, right? So we're looking at Microsoft. It's trading 16 million. Then we come and we look at open interest and we say, do we have at least 20 times the number of contracts we're going to trade? Well, on the at the money strike, we've got almost 6,000. We have 1,100 traded just today. So check. Is the bid-ask spread tight? And our definition of tight is less than 10%. And this is 40 cents on a $17 option. So is it below $1.70? Check. So we're kind of check. We're kind of all systems go on that. Now, if we're doing this in our trading a smaller account, we don't want to risk more than $500. So a $1,700 option is not a choice for us. So we have to go further out of the money. But what I want to point out is when we're picking our expiration date, here is theta. And theta is how much we're losing to time decay. And if we're looking at the money strike, we're losing 38 cents a day to time decay, just the passage of time, even if the whole position stays where it is, where we're only losing 21 cents, on a more expensive option. So as a percentage, it's hitting us far less. And so we're going to pay more to go out to June, even though we only want to be in this trade for a few days. It's the time decay is the reason we're choosing to go out further. And in our trading a smaller account, we don't want to risk much more than $500. And so we're going to come out here. And so some might say, well, Barb, are you new? Like, this is nuts because the delta here is only 18 and it's 53 up here. And so why do I care about delta? What delta tells me is if this stock goes up by $1, the value of this option goes up by 53 cents. Okay. Well, now it's 53 cents. It's like that finite number, right? So if I say, okay, if it goes up 53 cents and I divide that by, let's say I'm paying $22.45, that's a 2.4% move, I'm rounding. That's a 2.4% gain on this option if it goes up $1. Now, if I come down here and I'm only getting 18 cents, like, is it even worth doing? But 18, if I divide 18 by 5, oops, 18 divided by 5, as a percentage, 3.6. It's actually substantially better. Yeah, CB is saying for the trade management, do we move the stop each day when there's a higher low? You bet your sweet bippy we do. That's the trading plan. Yeah. Yeah. So, so as a percentage, it's actually more attractive. But what we're doing here is a short-term trade where our expectation is to buy, and I'm going to switch this now, and we're going to make this a scratch pad. Because for our first example, we did one of these trades in the other, trading a smaller account on Apple, and that hit our target on Monday. Okay, so this is a 1 ATR example, and we're going to use Microsoft for our first example. And the 1 ATR on that is 973. And so our target, we're going to go with today's high. So today's high, if you hover over the candle, is 427.18. And then to that, we're going to add 973. And that gives us 436.91. And then our exit on this is going to be 407.47, which is today's low, minus 973. And that equals 407.47. Yeah. Okay, so now we have our target. Oh, equals. Oh, somehow 407.47. This number was 417.20. Sorry, guys. 417.20. And we can see that just by, if we hover over this candle and then we look at the bar beside Microsoft, it'll tell us what our high and low for the day was. So 427.18, 417.20. So to put this trade in, we're going to come to our trade tab. We're going to come out to June, and we are going to buy, and we're just going to say buy a single. And we could say buy single with OCO, buy custom. But we're going to come down to single order, make it first trigger sequence. We're going to right click, create an opposite order, make it good till canceled, and then we're going to make it a market order. And this is just kind of a faster way to put this in. We're going to bring this up. First is the target, and that's just habit. I remember when my son was in 5th grade, we raced doing long division. And the only reason I won is because I did it exactly the same way every time. You know, repetition. 407.47. 407.47. So 436.91, 407.47, current price 424.32. So do these numbers make sense? Yeah. And the reason that I have this conversation with myself in my head is because, you know, we are human beings. And so there is the opportunity to make mistakes, right? So greater than 436, less than 407, we're going to save, confirm and send. And we are going to, so how much could we lose? $550. We could lose all of it. Now, are we intending to lose all of it? No, we have a stop in place. But if Microsoft were to gap down, we could lose all of it. And that's why we're position sizing the way we are. We're going to put this in our long call bucket. And then we're going to put in a note from ourselves to ourselves that this is a 1 ATR target and exit. Okay, fire in the hole. Now, if we want to put this on our chart, we can come out here and just draw a line. And I don't really kind of worry about where I draw it, because then I come in and edit it and say, okay, 436.91, that is my ATR target. And we're going to show that on the right. So now, when we come in, and this is a trade you're going to check daily. When you come in, you're going to see what the target is. So if it gets up to 436.52, and then we have, a hanging man or a shooting star pattern or some kind of candle that indicates this uptrend may be drawing to a close. We had a trade on Apple last year. It was within 15 cents of the target and looked like it was going to turn around. And so then you can make the decision. It's like, hey, we're close enough, and we can go in and choose to exit the position. Now, if you're not familiar with notes, when we come here and we see that we have this position on Microsoft, we can click on this, and actually it won't show there. We'll show here. And I have these arranged alphabetically. So when I come down, if I click on this note, it'll say, oh, right, that was a 1 ATR trade. You can also add a note column if you want on your, so here under long calls, you see I've got notes here. So we wanted to compare this. Oh, so with that, we must have done a stock position also. And then we can come down here and we can see our notes. Okay. I probably did one on AEP also. That was a swing target. So because our management rules are different depending on what your target is. So if you would like to see an example trading plan, and this is where I insert my commercial, like if you haven't subscribed to the Trader Talks channel from Schwab Coaching on YouTube, it's free. It's not just free for 30 days, it's free forever, and you get access to all the archives, which is pretty handy. And when you first come in, what you'll see is whatever's currently being taught. When you come to playlists and scroll down, this is the trade management mini sessions. It's just a folder that I have put a lot of short content in that I think you guys will find helpful. So the first group, and they're all in kind of this turquoisey green, are short videos on candlestick patterns. And up next is getting started with technical analysis. Today, we're actually talking about candlestick patterns. This next group that's in blue are example trading plans. And some of these I recorded about 2 years ago, so I'm starting to replace them. But here's one for long calls with 1 ATR target. So it's 18 minutes long, and we build an example trading plan together, which includes, what to buy, when to buy, how much to buy, when to exit, whether the trade is going for you or against you, and then what are your daily routines. Okay, so these are in the minis. And then if you're, new to my classes, or new to these classes, period, and new to Thinkorswim, at the very bottom, there's some short videos on placing an OCO order, customizing a chart or your monitor tab, or I did one on notes. So there's a bunch. Yeah, so somebody's asking a question about the line that I drew on the chart. So let's come back to the chart. So what I did, the reason the chart automatically, when I draw this line, so if you draw a line anywhere on your chart, so I've drawn this line and it's going to be thin and black and it's not going to have the price on it. Then you're going to right click and edit. And when you do that, I changed my line to blue and I went from solid line to dotted line. I made it a little thicker so you guys can see it. Okay. And then I said, show the price. The default is not to show the price. I said, show the price on the right whenever I draw a line. and then save all that as a default. And then, so I saved all that as a default. And then when I go in and edit and put my target, I just put target, and then I say, yeah, show it on the right. And then I've added a little extra space at the side so that it's not overrunning. It's not overrunning my candles. And to add space at the right, you come to your sprocket and you're going to come to your time axis and say, give me an extra, I have an extra 30 bars. Okay. Michael is asking, if I save the playlist to my personal playlist, will it update when Barb posts new videos? I actually don't know. I always just go to that Trader Talks. Yeah, and click on the playlist. But I also, when I post a new video on that mini session playlist, I always post that on X, and I typically will also post it on LinkedIn. And so, like I only use X for my Schwab life. I can also sometimes post pictures if I've gone hiking or skiing on the weekend, that kind of thing. But yeah, yeah. So a lot of clients will just follow people in the, that they want to see trading information or that kind of stuff on. They don't get into all the other stuff. Okay, so time is marching on. So let's now go and look at AMD. So Microsoft tech stock, AMD. So kind of similar, like although, AMD is up 31% year to date, so not having a bad year, but it kind of in the last 6 months created this big double bottom pattern. And I'll often post like pictures where, I'll draw the double bottom. And so a technician, one of the ways to measure a target is to say, okay, this goes from 190 to 265. So, I am going to create a target here that measures this range, which is about $65. Well, actually $75. And so if you wanted to do a longer term trade, you could buy the stock and put a target $75 out. But what if you're trying to plump up your Paris for Christmas fund or new car fund, and your car's on its last legs and you're just looking to create some shorter term income? You could say, well, this has, we've got this double bottom, it broke out, we had a 1-day pullback. This is quite the bull flag. And today, it's not trading above the high of this low day, which hit a new high for this stock in the last 6 months, but it's moving to the upside. So if we said, well, what if we just, put in a short-term target, and some, if you don't like to trade options, some might do this with stocks, and we did an example of how you could do that with a stock. But this is almost a $300 stock. So you couldn't buy a lot of stocks if you had a smaller account like we have here, where we could buy $5,000 worth. So maybe we could buy 8 or 10 shares. But if we used an option, it might allow us to take advantage of a move we're expecting on this more expected stock in a way that we can afford, and we can define our risk and all of that good stuff. So let's see. And again, we'd hover over this. Oh, I've already cleared. So we would hover over this candle and say, okay, the high for today, we're on AMD, 284.28. Oops, 284.28. And the low today, 276.62. So 284.28, our one ATR is $10.48. So 248.28 plus 1048. Okay, so for our second example, because things changed since I did my math earlier today. Okay, let me just. Okay. So here's an example using AMD, and our one ATR on AMD is 1048. And then our target on this is going to be 284.28 plus our 1048. Feel free to double check my math, guys. 258.70, 284.28. Okay, 284.28 plus 1048, 294.76. I apparently can't use a calculator properly today. 294.76. And our exit is going to be 276.62 minus 1046, 266.16. And then when we look at this 281, is this below? Yep. Above? Yep. Does that look like it makes sense? It does. We're going to come out to our trade tab. Again, if we're looking at an example trading plan, does this, and we're going to come back to my basics. Does it trade more than 1 million shares a day? Check. When we look at the options, all these strikes, thousands of contracts, bid-ask spread, if we're looking at this one around $5, is it less than 10%, 30 cents? Yes. 1,400 contracts? Yes. So we're good to go there. And so we are going to buy. How many are we buying? One. Why one? Because we don't want to risk more than 500. Well, we're not intending to lose the whole thing. Well, we're never intending. In fact, we don't want to lose anything. But we know that sometimes things happen in the market and we end up, things don't go the way we're expecting. So we're clicking on our sprocket to customize. Again, target first, 294.76, 294.76, and our exit at 266.16. Hit save, confirm and send. How much are we risking? 500. It's saying our max profit is infinite, but we have put a target in to say, hey, if and when this gets to 294.76, we want out. If it goes below 266.16, we also want out. And we're going to put that in our long call group. One ATR, target and exit. Okay, would you guys like to see another example? Yeah, so the adjustment, if it's $50 or less, so Andy, thank you for putting that in there. So our exit adjustment, we're going to do that daily, which is daily. If the stock price, and you know what, this is just an example. So if it's under 50, we make it 20 cents below the close, the low of the day. If it's 50 to 100, oops, 50 to 100, I think it was $1 or 50 cents below the low of the day. that's what we adjust our stop or our exit. If it's 100 to 200, we make it $1 below. And you would think I could type by now. And then if it's over 200, and some might just say, like, I'm just going to make it $1, then it's $2 below. But you know, this thing can move $10 in a day, and this is just an idea of how you might structure an exit. Okay, so I don't know if we're going to have time to do another ones, but I want to show you two more example setups. So here was one, I did the math and everything, and then there may have been the use of an expletive. I will just be honest about that because, you know, here we have AMAT up 54% year to date, another, you know, another tech stock. So shall I feign surprise? And then we set up this little double bottom. It broke out, came back to retest. We have this bullish Harami pattern setting up. But when I came to the trade tab, oh, well, now it's looking a little better. But like the bid-ask spreads, when you get out here into the snack bracket that we can afford to trade in this $5 arena, well, this is 35 cents. So we actually could place this trade. But some of the bid-ask spreads, like here, 9.95 and 11.25, like they're, you know, this one here over $1. And there's 6,000 contracts. Now this one, we have a 35 cents. So we could do this one. You know, so if you wanted to practice, you know, but one of the things is, do you have a rule? And if you have a rule, you need to follow it. And so here's another example that you could, if you wanted to practice, you could use. And AVGO was another one. Today, largely sponsored by the letter A, except for Microsoft. And again, we had this, you know, resistance line kind of setting up here. And then it breaks to the upside. We have a 1-day pullback, and it looks like it's moving again. And Broadcom, you know, if we come to the Analyze tab, surprise, surprise, another tech stock. And so if you wanted to do some practicing, you know, these are places, you know, examples you could practice on. Apple is another stock where we saw a diagonal resistance breakout. It's pulling back today. And so today wouldn't be an entry. But what if we had a bullish Harami pattern set up tomorrow? Well, you know, it might be worth keeping on your watch list to say, like, oh, was this a legit breakout or is it turning into a fake out? Yeah. So guys, that is the one ATR strategy. We've shown you an example of where to find like an example trading plan in the trade management mini sessions on, you know, the YouTube channel, Trader Talks from Schwab Coaching. Here's what I ask. If you haven't subscribed to that channel, you're going to want to do that. You'll want to hit the like button. One, it lets Brett and I know that you found this, you know, content valuable. More importantly, it moves this up in the algorithms on YouTube so more people will see this content. And so that's really helpful. And then don't forget, find me and follow me over on LinkedIn and follow Brett and I in the land of X, Brett Crowther CS, Barb Armstrong CS. I appreciate you joining us. Stay tuned. At the top of the hour, we'll be getting started with technical analysis. We're talking candlesticks, and it's yours truly again. So if you haven't had enough of me, come on back. And then I'll also be teaching later this afternoon. I think I forget the name of it. Building a stock portfolio. I'm filling in for Kevin, who is on his way back from a live event in Boston this past weekend. So guys, thank you for joining us. Thanks to the guys behind the scenes for helping bring this class to life. And thanks for each and every one of you for being so participatory in the chat. You really make this a pleasure. And thanks to Brett for his help in the chat as well. Take care, everyone. Have an awesome day. Bye for now.